final trade of the day. Joining me now is Tom White of TD Ameritrade, here to take a closer look at some really exciting earnings coming up. So thanks for coming on the show.
It's great to be back.
Let's start with Starbucks.
Stock's kind of underperformed this year. It's up about 5.5%. So it's up only about 50% of what the overall S&P 500 is, and it's really severely underperforming the NASDAQ 100, which is up about 23% for the year. The stock is kind of hovering below this $59 a share level. I think it's found its base over the near term. Still pays a great dividend, still expanding. I think the shares get back up to that $60 level, perhaps a little bit higher if we see a blowout number in the shares.
What's your trade?
In there, I'm definitely going to do something relatively neutral where I stay around that $60 a share level.
What's your thought on Intel ahead of earnings?
Intel, it's down 4.5% this year. It's severely underperforming the NASDAQ 100 and the tech sector in general, which like I said, is up over 23% this year. AMD just released earnings yesterday, and it was a good report. But the company's still losing money, and the share price in AMD was going up. NVIDIA, another competitor, has seen its stock price skyrocket. So Intel's got to work on their cost cutting a little bit more. We're seeing 35 to 37 strikes traded quite a bit. It's outpacing put volume about 2 to 1. So expectations are pretty high.
And then there's the big elephant in the room, Amazon.
Yeah.
What do you do with this ahead of earnings?
Yeah, we've got this new term, you don't get Amazoned. The options market's pricing in about a 3.5% move post earnings in Amazon. So expectations are still really high in there. Their Amazon Web Services continues to take market share. It's the market leader in that space, above Microsoft, above Salesforce. So we expect that to grow a little bit. I think they're spreading themselves a little bit thin. The acquisition of Whole Foods that's coming up, getting into other spaces, but they're spending money because the growth in the other businesses is there. And that's why the stock's at over $1,000 a share right now. I could see the shares continue to go higher because the shorts have kind of been washed out in there.
Lots to watch. Thank you.
Yeah.